Today, we're going to dissect one of the market's absolute wildest rides, Aspire Biopharma, ticker ASBP. You know those stocks that just shoot to the moon and then completely fall off a cliff? If you've ever wondered why that happens, well, you're in the right place. This is the story behind one of those stocks.
So just get a load of this roller coaster. Back in July, you could have picked up a share for under 30 cents. By the middle of August, it had nearly tripled, peaking at over 87 cents. But then, just as fast as it went up, it came crashing down, erasing all those gains and then some, bottoming out at 20 cents by the end of September. And now, it's clawing its way back, recovering to 42 cents. What a ride.
So you've got a 200% rocket ship ride up, followed by a 75% nosedive, and then another big rally. These aren't just numbers on a screen, they represent real fortunes being won and lost, sometimes in a matter of days. So the big question is, what in the world is actually driving this chaos? That's what we're here to figure out.
Okay, so first things first, let's just zoom in and really appreciate the sheer scale of these price swings. To understand what's happening under the hood, you have to get a feel for just how dizzying the highs were and how absolutely brutal the lows have been.
This right here, this was the moment, the peak on August 18th. This is the number that created all the hype, all the FOMO, and pulled in a flood of investors who were betting that this was just the beginning of the climb.
And then, bam, just 6 short weeks later, this was the new reality. From almost $1 all the way down to 20 cents. A drop like that isn't just a flesh wound. It can completely wipe people out. It's a really stark reminder of the kind of risk we're dealing with here.
But here's where it gets really weird. For all these massive, life-changing swings, there's no actual predictable pattern here. There's a stat called R-squared that looks for reliable trend, and for ASBP, it's incredibly low. What that means in plain English is that the stock's price is basically on a random walk. It's just bouncing around, driven entirely by the news and the hype of the day.
Okay, so if the price chart itself is just a mess, where do we even start looking for answers? Well, we follow the money. The insane number of shares changing hands every single day, that's the trading volume, and that's where the real story starts to take shape.
And just look at the firepower we're talking about. On August 18th, right at the peak, you see 467 million shares traded. But check out the spike during the recovery. On October 2nd, over 637 million shares in a single day. That's not just a busy day at the office. That is an absolute battleground between buyers and sellers.
So, how do we make any sense of this volume chaos? Analysts have a really cool tool called on-balance volume, or OBV. The best way to think about it is like a running tally, a scoreboard, really, in this big battle between the buyers and the sellers. When the stock closes up for the day, all of that day's volume gets added to the score. When it closes down, it gets subtracted. It shows us who's really winning over time.
And here's the kicker for ASBP. That scoreboard is showing a huge positive number, over 2 billion. This is our first major clue. It tells us that even as the price was collapsing, on balance, more shares were being bought on up days than sold on down days. This is a classic sign of what's called accumulation. It suggests that while retail investors were panicking, some bigger players were quietly scooping up shares.
All right, so that's a huge piece of the puzzle, right? Big money seems to be buying, but, it's never that simple. When we look at all the other technical signals, the story gets, well, it gets messy. This is where we hit a wall of conflicting evidence.
It's really like a technical tug of war. On one side of the rope, you've got the bears, pointing to weak momentum and that random price path we talked about. But on the other side, pulling just as hard are the bulls. And they've got some heavy hitters. The stock is deeply oversold, money flow is high, and of course, that massive accumulation signal we just found.
Let's zoom in on one of the strongest bullish clues. The name sounds super technical and intimidating, stochastic oscillators. But all you really need to know is this. It's basically an overbought or oversold alarm for a stock. It just tells you when the price has been stretched too far, too fast in one direction.
And right now, for ASBP, that alarm is ringing off the hook. It's screaming oversold. This is a really powerful signal. It suggests that the wave of panic selling that drove the price into the ground has probably exhausted itself. The stock is coiled like a spring, potentially ready for a rebound.
So let's recap where we are. We have a completely chaotic price chart, evidence of huge hidden buying, and a whole bunch of technical signals that are all pointing in different directions.
Now let's try to put all these pieces of the puzzle together and see what could happen next.
When you boil it all down, the analysis points to three main paths this could take. First, the bull scenario. The recovery keeps chugging along, breaks through some barriers, and heads up toward that 50-cent mark. Second, the neutral scenario. The stock just kind of chops around sideways for a bit, catching its breath. And third, the bear scenario. This whole recovery fizzles out and the price tumbles back down to retest those painful 20-cent lows.
So which one is it? Where's the evidence pointing? Well, the analysis suggests that the powerful 1-2 punch of massive accumulation and those deeply oversold conditions tilts the odds in favor of the bull case. That means a continued recovery, probably aiming for the 46 to 50 cent range. But listen, with a stock this wild, nothing is ever guaranteed.
And really, this quote from the analysis just hits the nail on the head. It perfectly sums up what the stock is all about. At its heart, it is a high-risk, speculative stock. But the key thing to remember is that it's coming out of a brutal sell-off with some really strong signs that big money might be stepping in to buy.
And that really brings us to the big million-dollar question, doesn't it? When you see this kind of massive buying during a total price collapse, are you watching a calculated, strategic recovery play by smart money, or is it just a massive, high-stakes gamble on a stock that's famous for being unpredictable? That tension right there is what makes the market so incredibly fascinating.